Hey everyone, welcome back to Corporate Decoder. Today we're diving into a juicy filing from Apple iSports Group. And no, this isn't about the tech giant Apple getting into sports. Get ready for a little accounting drama, complete with a plot twist that'll make you question everything you thought you knew about their financials. First, let's set the stage. This is an amendment, a revised version of a report they filed earlier in the year. The original report was filed in January, but this version from February is where the real story begins. It's a correction of sorts, and those always raise eyebrows. Here's the headline: Apple iSports Group is saying that people should not rely on some of their previous financial statements. Specifically, the ones from the quarter that ended in June. This is never a good sign. It means they found a mistake, something big enough that it makes those earlier numbers unreliable. Now, the filing says the issue involves the repricing, changing the price of a private placement. This is when they sell shares of stock directly to investors, not on the public market. It originally sold for $1 per share for a total of 80,000 shares of common stock. The price was then lowered to 25 cents per share, resulting in the issuance of 320,000 additional shares of stock. This repricing they initially thought would increase their net loss, the money lost after expenses, for the June quarter by $80,000. But here's where the twist comes in. After more looking into it, the company changed its mind. They are now saying that the net loss was not actually warranted, meaning not justified. They decided that a different accounting rule applies, one that only requires a minor change, a reclassification between common stock and additional paid-in capital. These are accounts on the balance sheet that relate to the value of the company's stock. And according to them, this small change doesn't require them to restate or republish their financial statements. So, long story short, they initially said they needed to correct a mistake, but now they're saying, never mind, it's not a big deal after all. The company's CFO, Chief Financial Officer, along with consultants, spoke with their independent accountant about this whole thing. This is important because it shows they got outside advice on the matter. It suggests they are doing their due diligence or carefully reviewing their choices. Now, what does all this mean? Well, on the surface, it seems like they're saying it was a mistake and they are correcting it. They don't have to restate their financials, which is a relief for them and their investors. Restating financials can be a long, complicated, and expensive process, and it can damage a company's reputation. However, there's always more to the story. The fact that they initially thought a restatement was necessary raises some questions. It makes you wonder what else might be lurking beneath the surface. It also makes you wonder why the auditors didn't catch the mistake from the get-go. Apple iSports Group is in the sports business, but based on the report, it's hard to pinpoint exactly what they do. The company appears to be quite small. Remember, they were initially concerned about an $80,000 adjustment. That kind of number is small for a large, established company. Here's my take. The company's decision to amend its 8K filing and reverse its initial conclusion about needing to restate its June financials suggests a level of uncertainty. Although the company ultimately determined that the change was not material, the initial concern about a significant restatement highlights the complexities and challenges that small companies often face in navigating accounting standards and financial reporting requirements. A potential risk could be how markets perceive this change. Investors may worry the company doesn't have stable financials. It may be a weakness in their accounting practices. The opportunity here could be if the company clarifies all concerns and stabilizes trust in their financial reporting. It may lead to stronger investor relationships. My conclusion is to approach Apple iSports Group with caution. Do your research and don't believe all the PR talk that may be present. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more corporate decoding.